Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. Well, all good things must come to an end, right? Just like volatility, when it's gone, you know it's coming back. It's just a matter of when, not if, right? So, uh, Monday, talked about just how much of a low volatility, low volume, grind, trending environment we've been in for such a long stretch. And you know, it's one of those things where kind of volatility, you don't really know what could trigger it. You don't know when necessarily it's going to come back. Um, but sometimes it just can appear out of nowhere, and just like on a random Wednesday like today, right? It starts to rear his head again, and as great of a trend as we've been in, things can really start to the ranges can really start to expand, and the volatility can really start to accelerate pretty quick, because trends are just like these environments where you have like this lower volume, lower volatility, kind of like really steady action, and when you start to like violate really critical levels, that's when you start to see the volume kick in. That can lead to the wider ranges, and that leads to the pickup in volatility, right? So we did talk about the 8 EMA, the importance. This is the spiders, but the Qs basically the exact same thing in terms of like setup. You can see, right? Basically the exact same thing. The 8 EMA, we spent a lot of time talking about how it was like the real key momentum indicator, right? As long as the spiders and the Qs held above the 8 EMA, then the trend remained intact, and you're focusing on bullish trade ideas, bullish breakouts, bullish continuations, trend reversals, so on and so forth, right? When we lose that 8 EMA, then you really need to like start to like clean up some bullish trade ideas, or maybe some longs that are extended, right? You want to maybe get a little bit more cautious, and what I said was get like a better mix of trade ideas, right? So in a bullish trending tape, maybe you're thinking like 80 to 20% bullish versus bearish trade ideas, right? Or maybe 75 to 25% bullish trade ideas versus bearish trade ideas. If we start to lose the 8 EMA, which you can see here, right? This green line is 8 EMA. If we start to break below that, then we're going to lose kind of like a pillar of this really aggressive uptrend. And that's when I really want to start getting like the trade ideas like a better mix, right? So, it doesn't have to be exactly 50-50, but maybe you want to start looking maybe like more like 60-40, so like bullish to bearish, right? Because we're still in, overall it's a still an uptrend, but we're losing kind of like a momentum line in that uptrend, and that can kind of open the door for again like a pullback, higher volatility, maybe more two-way action than what we've been accustomed to see over the last month and a half. All right. Also, it's kind of a reminder, right? Today, you saw some selling hit the tape, you saw some volume come in, some things really started to like accelerate to the downside during the afternoon, right? If I go to like the 30-minute chart, you can see what I mean. So right here, right? So it kind of just was, like a quieter morning, which we've seen plenty of times recently, but then all of a sudden, boom, it's got the really sharp move when we started to break down. The volume picked up. A lot of things kind of got like kind of steep on a slope, right? So it's just one of those reminders to me why it's nice to have hedges in place. Okay, so I did a video last week just talking about like the different hedge ideas. Why I focus on the spiders, one of the Qs. So if you're interested, you can go back and check that out. But what we also talked about on Monday again is that say you're like, oh, I like we're in a really strong trending tape, like the hedges just keep getting like their premium eroded, right? And that's fine, that's understandable. Like if we're kind of just like steadily grinding higher, right, just consistent higher highs, higher lows, then yes, like the hedge, they're going to start to see that premium erode as the time value erodes, right? The implied volatility keeps ticking down. But what I was saying is you could almost view it as like a trade in its own right, right? So maybe you have like a hedge in place, and then maybe you could look at it as if the spiders break the 8 EMA, then maybe you can add to it and maybe view it as a trade, right? Add to the hedge and view it as like a trade even. Or like the Qs, when they break their 8 EMA, maybe you can add to like the hedge, or maybe even like focus on some sort of like downside bet specifically, because realistically, if they don't bounce to reclaim the 8 EMA, you're looking at probably a move to the 20, which is like another like about 1% lower on the spiders and about 1% lower, 1% lower on the Qs and about 1% lower on the spiders, right? So you can see like the 20, that's the next really critical level. So Um, you can almost view it as like a trade in its own right, not necessarily just a hedge, but as like a trade where if you break the 8, then you're looking for a move to the 20. Okay. The VIX, it's not certainly not the best trading instrument, but you can see how low and kind of like lifeless the VIX has been, right? But it's one of those things where if it wakes up, it can go pretty quick, pretty sharp over like a few days. Not necessarily expecting a repeat of like July or even September, but with the VIX trading down in like the 12, 13 area, a little bit of move, maybe some short covering. I've been reading that there's a lot of short interest on the VIX right now. A little bit of a move higher could maybe like force a little bit of short covering and maybe get a push into like the mid-teens. Okay, so again, like UVXY, pretty ugly month and a half, but this could be something you keep an eye on. The VXX could be something you keep an eye on. I mean, those are both pretty much like the same exact chart, but if you're looking for hedge ideas, that there's still some of these things really haven't moved much. And like I said, like, breaking the 8 EMA, if we do crack underneath it, like that's going to be a really significant like momentum indicator. Okay, so it's something that you really want to focus on. We spent a lot of time Monday talking about it just because it's like a really critical level for this recent trend. So, I really want to stress like that 8 EMA. That's kind of like the line in the sand. If we start to trade underneath it, you really want to either get more cautious, maybe scale back risk on some of your longs, or maybe even like look at hedges or even like some like bearish trade ideas. Okay. All right. So if you have any questions about anything I talked about, like the hedges or like put spreads or any of that, please reach out. You can also circle back, look at the replay of Monday night's coaching session, or last week did a video kind of specifically talking about hedges, so you can go back and check that out as well. All right. If you like these ideas, or if you're looking for more like trade ideas, please follow up with the link in the description of the video for more information on options to play. I hope you have a wonderful night, and I'll talk to you all tomorrow.